Nobody knows if Bitcoin has bottomed or whether it drops to 50,000 tomorrow. But here's what I can tell you. 3 independent traffic lights that have called every major Bitcoin bottom in the last decade are all green right now. In the last 5 years, this only happened twice. Both times, Bitcoin went on to one of its strongest rallies ever, and one of them, a single line on a chart, has a track record of multiplying your money by 5x over the following 2 years. I'm David. I left the world's largest Bitcoin security company to help professionals and retirees protect and grow their wealth with Bitcoin. Bitcoin is hard to value, really hard. Warren Buffett built his entire career on finding underpriced businesses, analyzing earnings, cash flows, and balance sheets. Bitcoin has none of that. No earnings or dividends, nothing backing it in a traditional sense. With stocks, when the price drops, you can look at the fundamentals and decide if it's still worth holding. With Bitcoin, most people have nothing to check. So the drop feels endless. Nobody knows if it's almost over or just getting started. And that uncertainty is what turns a drawdown into a crisis. But there is a model, and across 15 years of price history, it hasn't missed a single cycle. It's called the Power Law. An astrophysicist discovered it by plotting Bitcoin's price on something called a double logarithmic chart. I know, bear with me. When I was studying aerospace engineering, that was textbook material. For most people, it sounds like something designed to end a dinner party. But here's what it showed. What looked like pure chaos on a normal price chart turned into a straight line. And a straight line on that kind of chart means the data follows a power law, the same mathematical pattern that governs how cities grow, how earthquakes scale, and how networks expand. The formula gives you 3 things: a floor, the lower boundary Bitcoin is approached but never permanently broken, a trend line in the middle where Bitcoin should be trading based on its age and growth, and a ceiling where price overshoots during manias before snapping back. And here's what that means right now. Bitcoin is sitting in the bottom 5% of all historical valuations on that channel. Not the bottom 20, the bottom 5. In 15 years of daily price data, you can count the number of times Bitcoin has been this cheap on 2 hands. The trend line says Bitcoin should be trading around $144,000 today. It is at $65,000. The last 2 times Bitcoin was this deep in the channel were March 2020 and November 2022. And if you don't remember what the headlines look like, here they are. Bitcoin loses half of its value in 2-day plunge. And 2022 was the year crypto came crashing down to earth. If you read those headlines, you wouldn't touch Bitcoin with a 10-foot pole. But the people who bought in those windows didn't need headlines to tell them it was the right call. The returns did. The channel is not a crystal ball, it's a map. And the map says you're standing in the same spot where the last 2 multi-year Bitcoin rallies began. The power law tells you where Bitcoin sits relative to its long-term trend. But a chart doesn't sell Bitcoin. People do. So are the sellers already gone? There's a metric called MVRV, market value to realized value. It compares the current Bitcoin price to the average price every single holder actually paid for their coins. It tells you across the entire market whether people are sitting on gains or sitting on losses. Think of it like a poker table. When you're up big, you start thinking about cashing out. Dangerous math starts happening in your head. When you're down, you stay. You're not leaving until you get back to even. They're attached to the number they paid, and that anchor controls their behavior. Nobody wants to leave the table when they're down, so the selling dries up. Right now, the average price paid by all Bitcoin holders across every wallet, every exchange, every cold storage device on the planet is around $53,000. That number means nothing to Bitcoin, but it represents the average of millions of individual anchors, the price every holder paid and can't stop thinking about. The typical holder is barely above water, not panicking or selling, just waiting. What do you think the long-term holders are doing? Almost nothing. The amount of profit being taken right now is as low as it was in the weeks after FTX collapsed. Bitcoin is trading 4 times higher than it was then. The old money isn't moving. So, who's still moving coins? Recent buyers are. They're locking in losses and getting out. That kind of selling exhausts itself. Once those people are gone, there's nobody left willing to sell at these prices. Every major Bitcoin bottom has looked like this from the inside. Not a clean reversal on a chart, a slow, painful process where the most frightened holders exit and the longest standing ones quietly accumulate. And when the sellers are exhausted, the floor forms. Not because anything changed, because the market has simply run out of sellers. And the third traffic light is the one with the 5x track record. A single line on a chart that has marked the floor of every Bitcoin bear market in history. I'll show you exactly what it is right after this. If you want to protect and grow your wealth with Bitcoin, but you feel overwhelmed, I've made a beautiful guide called the Bitcoin Wealth Roadmap. It has the exact 6 steps to take, how to keep your Bitcoin safe, and the mistakes to avoid. It's completely free and you can get your copy at mybitcoin.academy/roadmap. Links in the description. Now, the third light and the story behind that 5x number. Knowing Bitcoin is cheap doesn't stop it from getting cheaper. Price doesn't reverse because a model says it should. It reverses because buyers show up at a specific level. And in Bitcoin's history, there's one level where they always have. It's called the 200-week moving average. Take the average Bitcoin price over the last 4 years and draw a single line. That's it. Think of it like the seafloor. No matter how violent the storm on the surface, the seafloor doesn't move. Ships get tossed around above it, waves crash, but the floor holds. Bitcoin's price history has a seafloor, and for 15 years, no storm has broken through it permanently. In 2015, Bitcoin's price fell to that line and stopped. In 2018, Bitcoin's price fell to that line and stopped. In 2020, it touched it briefly during the COVID crash and rebounded within weeks. In 2022, after FTX, it touched it and stopped. 4 different moments, 4 completely different reasons for the crash, but every single time, buyers showed up at that line. Right now, Bitcoin is trading within 5% of the 200-week moving average. And here's what makes this the most actionable of all 3 lights. Across the 3 most recent times price reached that line, someone who simply bought averaged 5 times their money over the following 12 to 24 months. Not measured from the absolute bottom to the peak, measured at random intervals. 12 months out, 18 months out, 24 months out. Someone who checked back at any of those points averaged a 5x return. 3 data points, a small sample, I know. My statistics professor would not be impressed either, but 3 out of 3 across completely different market conditions is not nothing. The 200-week moving average doesn't tell you the exact bottom. No signal does. But it tells you where buyers have shown up every single time in Bitcoin's history. And right now, Bitcoin is within 5% of it. All 3 traffic lights are green simultaneously. The power law, the market value to realized value, and the 200-week moving average are all pointing in the same direction. This is not a moment to be paralyzed. It's a moment to be accumulating with conviction. So get started today by grabbing the free Bitcoin Wealth Roadmap at mybitcoin.academy/roadmap. Link below. Now, one thing this video didn't cover is the long-term math. How many people will realistically ever be able to own a full Bitcoin? And what that scarcity means for where the price is going. I break that down in this video right here.